Hello, everyone, and welcome back to the J22 Report. I'm your host, Johnnie Market. You all know that drill. Smash that like button, subscribe if you already haven't. And let's get into today's stuff. I did an interview with Sean Hyman. A lot of experience in markets and everything. So if you haven't listened to that, I would encourage you to go listen to it. It's my channel. It's probably in the cards. Somewhere in this video, and it's a pretty good interview in my opinion. He gives outlooks on where he thinks things are going and whatnot. But just want to do a little disclaimer. Nothing I say should be construed as financial investment advice, just my opinions and my thoughts. And just wanted to do a couple of things. I've been saving some of this for a couple of days, so that I'm going to talk about. But anyway, Google Finance, Dow Jones, if you look at that right here, that was down today 125. S&P's up 22, NASDAQ up 99. A lot of times it would go Dow Jones would be up and the S&P would be down. So looks like it's sort of a reversal of things. I think the market's going to go sideways. If it goes sideways around 6,000, I think it has one more move. But in my opinion, I think we're in the euphoric stage of the market. I don't know the exact top. I just think it's still going. I don't think there'll be a down sentiment really shift until we get really consistent bad economic data, which I think is coming. Let's get into something else. Let's see. If you listen to this channel, I just want to take a victory lap. Why Trump tariffs aren't steering Wall Street off a bullish path for stocks. I said these Trump tariffs, if you look at my videos the past couple weeks, these are nothing burgers. As soon as he sees that stock market down, he'll either stop the tariff talk or he'll have the Fed do QE. And I knew something like that was going to happen. I don't know exactly what's going to happen. I always have different scenarios. There you go, right there. Yahoo Finance, the Dow's down 125, S&P 25. Um, and regarding gold today, thank goodness it went down. It went down marginally. Like, let me click on that. Hopefully, I can see that. If you actually look at it, 10 a.m. it was really down. The dip was bought aggressively. So that's a good sign. That's a good sign. Strong buying. Set in this channel 3,000, and then we'll reevaluate. So I've been consistent. Been very consistent actually with that 3,000 market. And not only am I consistent, but maybe I think Citi and UBS listen to this channel. They're calling for 3,000, of course, on tariffs. Like they don't understand the real reason I talk about it. Safe haven demand, but banks are bullish on gold, I guess. So, regarding the stock market, though, this is the other thing I wanted to do. I like this newsletter, but U.S. markets concentration bubble has never been bigger. And this is one of the things of the stock market. Market 10% of the largest stocks is like 75% of the market cap. Oh, there it is. Record 75% of the world just is the 10 biggest stocks. So that is not good. Look at that. The 2000.com bubble is 73. It even exceeded the Great Depression, which was right around here. 1940, as you can see right here. And of course, it shows me right here. So look at that. This is not good. Every time it got this high, where it's the GD, Great Depression, the tech bubble, this has not ended well. So And then in terms of the real economy, how's it doing? I'm going to talk about this real quick. Chipotle sales missed signals, growth is slowing. And the other thing about Chipotle is that I want to go find this, but they literally were one of the few uh, restaurants that actually brought in more customers over the last year. They're one of the few. And so this just goes to show that the high end, which I mean, yeah, call me whatever you want, but I think Chipotle is very good. And I really like it. I haven't eaten it much lately, but I think it's very good. They can charge you can charge about $16 for a burrito. Let me burrito cost at Chipotle. Let's see. I don't want to give out too much, but the stores I go to, it's like $16 for a burrito. And if you can do that, that's a good store. It's good food. People won't pay that much. So, anyway, Amazon. Look at this today. Outlook disappoints once again. The earnings and everything did beat for all transparencies, but Outlook, I think it was the cloud revenue too. Guidance was short of Wall Street. Let's take a look. Unfavorable impact of foreign exchange rates. So if you look at this, I'm not saying Amazon's going to crash or whatnot, but I will tell you this right now. Regarding Amazon, Amazon should be blowing out earnings if we had a strong economy. That's where America shops. And the fact that they have to go to tech shows, they need government contracts because the US customers broke. And that's why I said, and you can see Doge is failing, meaning they are cutting some things, but they're not actually cutting spending and cutting government because that's being reallocated to other areas of spending. And if they really cut spending meaningfully, a lot of these companies they would go broke because their only customer is the government, and it's because the U.S. customers broke. But you'll see deficits are going to be much bigger this year, much larger, so it will be a failure. But so there it is, the largest cloud provider, and let's just largest cloud provider. Look at that. Cloud misfires. Lack of capacity to meet AI. So there you go. Guidance is bad. And the other one, I didn't do this because I had the interview. Alphabet stock tumbles after cloud revenue misses and spending growth. Why? Costs are going up. That's why they're spending more. Costs are going up, spending's going up, and they're going to lose the deep sea. Let's just be honest. Big tech, US tech's going to lose the deep sea. So anyway, let's look at this. You want to know another leading indicator that we'll be in recession late this year or next year? Americans looking for work haven't had it this hard for almost 3 years. And this came out, and this is what I said. If you listen to this channel, you would know this. And this is why you have to listen to this channel, because I tell you the truth, and that is when it comes to jobs and the US data with Trump in office, they're going to be more honest. They're going to be much more honest about, I mean, I'm not saying they'll be fully honest, but they will be more honest to, especially with what's happening with the government workers. They're going to be more, their sentiment is really low, and they will be more willing to post bad economic numbers in the BLS. Why is that important? Because Wall Street cares about that data. Wall Street cares about it, and they make financial investment decisions. So, yeah. And remember, all the job growth that helped kept the market up during Biden's administration, well, that will be reversed. Because look at this, layoffs likely. Now, granted, I don't want to get too much in this, but layoff likely if government employees quit or say. So this is the thing. It will be very interesting to see. Now, I'm just saying how this affects on the markets. I'm not here to talk about anything else. And I think this is a scam because they're going to do tax cuts and that revenue is going to decline rapidly, and they're going to reallocate the money somewhere else. So I don't think there'll actually be any real savings or any savings personally. So anyway, in terms of the markets though, with all these government employees being laid off, that was a lot of the jobs from the Biden administration. So it's possible next year when they really start revising uh this data and they start really looking at this data, they are going to see you're going to see bad jobs numbers. And bad jobs numbers that will lead to QE regardless. That will lead to QE or that will lead to it will lead to QE or a market crash. I don't know if now I think the market crash is coming in the next couple of years. Could be next year. I don't. It could begin later this year. I'm not sure exactly when. We're overdue for a correction, if you ask me. But I think there's one more move up. So I'm not really sure, but that's all I have to say. Just remember gold. I think that's going over 3,000. This is the chaos environment for this. And I think, I wanted to let me see if I can. Right now, I'm not sharing my screen, so I do want to take a victory lap and comment below because I do read all the comments, even if I don't respond to them. I do read them and just want to get back to, oh, I know what to do. I'm gonna find this video because and so let me share my screen again. And so I was looking at this, and this was 7 months ago, and there is something. Look at this. This was on July 5th, 2024. And let's see where precious metals was. See where precious metals was. I'm not saying this to brag, I'm just saying I look at things as is. And so let's see, year. No, it's not a year to date. 1 year, that's good. So look at July 5th, gold was at 2378. And I said it was getting ready for blast off right here. And I have a comment here. Of course, it can't just uh heard it all before. Gold gets beat down 30 every time it goes near 2400. Paper, whatever, won't let it happen. So anyway, this is why I would say the manipulation story. One, it's fake. It's not true. Gold is not manipulated, number one. Number two. But the reason why this is also such a bad thing and ignore anyone who even remotely considers the manipulation story true is that it clouds you from seeing the market as is, not the way you want it to be. And the reality is that's life. Sometimes people are what they are, not what you want them to be. And if you look at it, gold, July 5th, there was many of indicators where it was going to go. It was right around here. You can tell it was bottoming out. And it just goes up, makes a move to 2-3, goes up from like 2-2 something, but it goes up, makes a move, tests that move, goes back up, breaks 24, sort of retest in a choppy manner, and then around August breaks 2400, never looks back, never looks back. So I'm not perfect all the time, but I do want you to know I try to provide the best analysis and crowd out the noise in terms of what's happening. So anyway, hit that like button, subscribe if you haven't. Just remember, nothing should be construed as financial investment advice, just my opinion and thoughts on the market.